Hey everybody, Jake here with Jake Wu Market Research to go over the weekend video update into mid-March. We'll touch on some futures names, Bitcoin, and several individual names going into the week ahead. This will be an overview of the weekly candles, just a quick overview, nothing too in-depth. So if you are looking for something more in-depth, definitely check out the Twitter subscription that I have. It's directly through Twitter on my page. You can check it out in the video description, and it's only $10 a month. I go over daily candle analysis on a wide range of names, definitely over 20 names. And then on top of that, I give out ideas that definitely look like they have high probability setups either to the upside or the downside, and really just overall an educational subscription as well. I really try to teach people how to fish rather than simply just, calling out things that people should buy. I'm not a financial advisor. My goal is to be the fishing guide and lead you to the fish, and then you choose which line you want to use, which type of reel, which type of bait. That's up to the individual quote unquote fisherman, fisherwoman. So definitely check that out if you are interested in more in-depth market analysis. Also, I do have a partnership with Optimus Futures. This is a futures broker that you can tie into TradingView. So if you do like using TradingView, which I do use for these videos and in general in my market analysis, you can definitely check them out in the video description as well. I also post morning charts on their Twitter page. So if you are interested in that, definitely give them a follow. That is also in the Twitter subscription, their Twitter handle. So let's jump into it. It was another very strong week. We actually almost had an outside bar here on the, let me pull an arrow out here. On the weekly candle, we missed it by barely maybe a few dollars, but all in all, you definitely have a huge candle here forming, a continuation after last week's breakout here. And overall, I mean, it was, maybe we had a little bit of a pullback on Friday, which is today when I did this video, but in general, the market continues to move up. Are we at a top? Who knows? That's a question to really answer through looking at some of the more shorter term time frames and get an idea. But for now, we are really just starting to break out here. I will say that, going up this many weeks in a row within 3 weeks in a row is a lot, but if you look back since pretty much October, we've gone up a lot more than that in a row as far as green weekly closes. So does the market continue to melt up? We'll have to see. But all in all, going into April is generally a pretty strong month for the market. We do have a couple weeks left before we do get to April, but just something to keep in mind. If we do get a pullback, we could potentially just simply be retesting this trend zone that we've tested now 2 weeks in a row, and that would be really a third week in a row if we did pull back next week. But all in all, if we do get some rotation out of these really overheated chip names into some of the names that have been lagging, such as Google, Apple, some of these names that have been just getting crushed and likely due from liquidity being sucked out of these large cap names to really chase these chip names that have been on fire. So if we do get some rotation back into those names that have been market leaders traditionally, that could offset any downside that we have in some of these individual chip names going into the week ahead. So definitely something to keep in mind going into next week. NQ is definitely looking a little less bullish. We have kind of a crazy looking candle here that same thing. I'm not sure. Let's zoom in and see if it did take out the low from last week, barely. So let's zoom in there. That was 17,826. That was 17,832. So no, we did not actually take out that low. That's why sometimes you have to go in and look at the fine print there, because it does look like it could have been an outside bar, but it technically was not, give or take, a few points. But all in all, we're looking similar to ES here as far as what the chart looks like, except we're kind of front running ES as far as breaking out a lot sooner through this diagonal trend zone that we are just breaking out of now on the S&P 500. But all in all, simply just a pullback at this point to retest this trend zone that we've been kind of grinding along for the last several weeks. You can see here that we pulled back, retested this area, and the path of least resistance is higher still, and that area would be around 19,173 on the 2.618 fib extension. And so what I'm doing is I'm taking the July high, connecting it to the October low. That's your measured move. We already tested this 1.618 extension here. We broke out of it and pretty much retested it a couple weeks later back in late January, and then have just continued to hit new highs with a new all-time high here this week as well. But all in all, not the greatest candle, but you have to remember, when you have a move like we've had since October, people get really jittery when all of a sudden they start to see red, especially when your NVIDIAs of the world are all of a sudden down 4% when you've pretty much seen them up 3 or 4% for the last 5 weeks, it seems. But all in all, this is really just retesting this trend zone. So for now, the path of least resistance is higher, but if you do look at some of the lower indicators, you could see that, we are starting to potentially get some divergence on the Williams percent range. You can see here very slight divergence there. If you look at the MACD histogram, and if you use the MACD a lot, you'll be able to kind of just see that the MACD line, the blue line, is getting closer to the yellow line. But you can see that the MACD histogram is slowly kind of moving down. So the difference between the blue line and the yellow line is getting smaller. So you could essentially say that the MACD line is starting to curl down towards the signal line. But, that happens quite often. If you look at what pretty much since the January 23 reversal, really, and even since October of 2022, we've had times where the MACD just continues to kind of get closer to the signal line and then just continues to accelerate. So it's really hard to use these lower indicators in such a strong market, just like it's really hard sometimes to use these indicators when you're in a very strong downward market. And so really price action is king here. It really always is, but sometimes when you are in a little bit of a less of a high momentum trend, these indicators will work better. It's something to note on those lower indicators right now, but it's definitely not something that should make or break your thesis. It should be a variable within your overall thesis when looking at the price action. Now, if we look at IWM, the Russell 2000, which if you're looking at the ETF, it's IWM, but if you're looking at this particular chart, it's RTY. That's the Russell 2000 futures. Pretty decent candle this week. We got a nice move up off the volume shelf last week. We continued to hit a new high this week. We did not close above this previous area, this previous high, and then I'm connecting it to this wick here from mid-February. So technically, we did hit some divergence resistance here going into the week ahead. But all in all, this is an extremely strong volume shelf. And that's essentially just showing that there's a lot of volume supporting price here. So you can see here, a lot of this volume is not really, doesn't have that much profit. So when everybody's still kind of sitting near break even or maybe a little bit of profit, you're not going to get a lot of selling pressure usually. So that is something to consider for the upside thesis for small caps and potentially some rotation into those names if we do get a pullback in tech. Some of these small cap names, which have really not done a ton since the beginning of the year, we could definitely see some rotation into these names and get a bigger breakout here. I would definitely like to see a weekly close above this previous high here. So if we were to look at that high, at least on RTY on the futures, that's right around 2097. So that would be an area that you want to see a potential weekly close above that area, or you do want to see a weekly close above that area for a potential bigger breakout in the coming weeks into the next month. On Bitcoin, another just very strong week, hitting new all-time highs. So congrats to the crypto players. I don't play crypto a ton. I've got some Chainlink, and it is notoriously just a lag kind of in its own world type of coin. So majority of the time, I'm looking at Bitcoin more as a risk proxy in the market. So, is risk on? Is it off? Right now, it's pretty much proven for the last 2-3 months plus that risk is definitely on in the market, and we've seen that kind of shown across the board in a lot of these names, the indices in general. But the thing I want to point out here is we are getting very close to a potentially big breakout. If you look at any of the past times where we've had a very strong kind of topping pattern, this happened in December of 2013, this happened in December of 2017, This happened in March of 2021, and then a slight higher high in November of 2021. Anytime you break out through these previous highs that were kind of medium-term highs in Bitcoin, whenever you did get a break and close above that area, you just continued to move up very strongly. So if you look at this particular point here, we moved up 1,500% in about 2/3 of a year, 238 days, so 34 weekly bars. So I guess less than that. A little over half a year. However, I doubt Bitcoin would go another 1,500. That would put it at an insane market cap. So that was 1,500%. This was around, if we can get to the top here, let's just go to this top. That was around 260% from the breakout that we saw in December of 2020 to the highs that we saw in November of 2021. So if we were just to, let's say it goes up 100% from here, that's still quite a move to the upside. And as you can see, these moves generally happen very quickly. Sometimes you will get a little bit of a pullback. We definitely had a pullback in March of 2017 before we continued to break out. We had a slight pullback in December of 2020 for a couple weeks before we really broke out and just accelerated very strong to the upside. And so it wouldn't shock me at all to see a little bit of a pullback, some consolidation here before we broke out. But if you really wanted a trigger, just look for a weekly candle close above the previous high. So we're on the weekly candle, so that would be your trigger, weekly close. And that's right at the previous highs at 68,991. I'm just going to call it 69,000. So that is something you'd want to watch for going into really the weekend to see if we get that weekly close. But keep in mind, we did have that happen back in February of 2017, and we got the 3-week pullback after that. So at the end of the day, you know, you really have to sometimes go on these shorter term time frames to really see what's going on. But for now, a very strong trend, and you know, crypto is really not being talked about that much as far as, you know, in the normal world, if you want to call it, the world outside of finance and FinTwit. You know, I haven't really had anyone ask me really about crypto that isn't really involved in the market. And generally when we've hit a top in the crypto market and Bitcoin, I have my friends calling me about Bitcoin, and at least that just hasn't happened yet. At least my friends that are not involved in the market. So from a sentiment standpoint and technical standpoint, it seems like the trend is definitely your friend, and the trend is currently up. If we did break out, one thing I'd want to mention here, and I have mentioned this in previous videos, but if you want to just take the high, connect it to the low, that's your measured move. The 7.618 extension's way up there, but we want to go to the 1.618 extension, which is at right around where did that go? That was not the 71, the 1. That is right around 102. So 102,000 would be technically the 1.618 extension. That would be your target if we did get a breakout through these previous highs from 2021. Going into Mara, this is a name that has not really acted very well as a high beta proxy in the market for Bitcoin. Miners definitely have some, I'd say, negative sentiment around them, simply due to the fact that many of these names have started to do offerings, taking advantage of the strength over the last several months. So you know, this has definitely not been a great proxy. Right now, we are in an ascending triangle. Going into next week, the downside trend zone on the diagonal side of things is right around 2085. But there definitely are some more technical levels on the daily chart that I go over in the Twitter subscription for the weekend update that I posted today. So definitely, if you want more information on more the very nitty-gritty technical levels, definitely check that out for targets and validations, that type of thing. RIOT is one that also has gotten absolutely destroyed, even worse than Mara, and really giving back a lot of the gains that we've seen since early February, simply because, same thing, dilution. These miners like to dilute after strength, and that's kind of what makes them sometimes not the best pick for, if you're not buying Bitcoin directly, sometimes they're not the best proxy. Sometimes they can be, and all of a sudden you get a dilution event, and then they have pretty much no correlation to Bitcoin, barely at all. So here, if we did continue to pull back, you've got a pretty big volume shelf here. That essentially means you've got a lot of volume supporting price, anywhere from around $10.50 all the way up to around $11.65. So that would be an area to watch. If you got a weekly close below the point of control, which is right around 1090, that would definitely create some overhead supply, because these volume shelves can act as supply zones once you start closing below them. If you're above them, they can act as kind of a support zone. Supply dries up at these areas because a majority of these shares are no longer in the profit. Supply dries up and you can get a bounce, not because buyers step in at these volume shelves, but because supply dries up. And so that's something that you would want to kind of keep an eye on going into the week ahead. But this is also another one that I have more detailed levels in the Twitter subscription in the weekend update that was posted today. Now, if we were to talk about a miner that has no problem continuing up, CLSK definitely seems to be one of the better kind of high beta proxies to Bitcoin. Yes, it did have a pullback this week with the rest of the miner names, but it closed very strong for the week, and we're kind of closing within this previous wick. And a lot of the time, if you see a close within the wick of a candle to the left of the current candle, a lot of the time you will see at least a test of that previous high's candle. So going into next week, that would mean a potential test of this high of right around 23.45. This isn't an exact science, but a lot of the time, if you get a close, an open and a close within a previous wick, you will definitely have a higher probability, at least, of testing that previous high from the previous candle. And as I just mentioned, in that case, that would be around 23.45. Great case study on the volume shelf here. A nice pullback. You kind of had supply dry up at this volume shelf. Think about if you jumped into the Dead Sea, right? You jump in and then you just immediately float back to the top. It's kind of a buoyancy thing. And these volume shelves can essentially kind of be a buoyancy for price when you move back into these areas. And that's a lot of the time because supply just dries up. And so we saw that here in the weekly candle, and a pretty good case study on volume shelves really acting not only as support zones, but also areas where price can move up off of. If you follow me on Twitter, I like to use the term launch pad because that's what they can act as a lot of the time. Now, if we want to really look at probably the best proxy on the equity side for Bitcoin, if you didn't want to actually directly trade Bitcoin, Coinbase is definitely proving to be the leader here. A huge move up this week, really over the last 2 weeks. And one thing that I wanted to point out was you have this diagonal trend zone that we broke out of, but you also have this previous horizontal zone. So this previous area from June of 2021, September of 2021 acting as support. Then you broke down, it flipped to resistance. So if you can't see my mouse, you can see here, this was support. We broke down, you retest this area as resistance multiple times, and then you continue down. And that's called essentially an SR flip. So previous support flips to resistance, or previous resistance flips to support. Regardless, it's called an SR flip. You wouldn't change it for an RS flip. If you wanted to, great, but the technical term for both is just an SR flip. And the thing is, we broke through that SR flip zone as well as the diagonal trend zone. So really some very strong price action here. Remember, this is a proxy for, it acts as a proxy, right? It's not like, okay, if Bitcoin goes down, Coinbase is definitely going down. But the market, I'm sure, is definitely anticipating some really big earnings in the coming months due to the higher trading volume and trading frequency that a lot of people are doing in the crypto markets. But overall, definitely, as Bitcoin hit new all-time highs this week so far, Coinbase benefited from that for sure. Going into the week ahead, generally when you have a breakout, the general assumption is you'll get a pullback and retest that breakout zone. We'll kind of see how that goes into the week ahead. And as I mentioned in some of the previous charts, I do more of an in-depth dive into the Coinbase chart on the weekly, but also on the daily chart going into the week ahead, just to kind of point out some important levels to watch. But all in all, this is definitely a status quo changing breakout here, and would not shock me at all if we continue to break out on Bitcoin, as we just talked about earlier. would kind of shock me not to see all-time highs in Coinbase. So let's just see how the next few months go. But all in all, some very strong price action here to note. NVIDIA, this thing finally, geez, it's been a while since we've gotten, some quote-unquote fear around this name. So I just want to point this out. This is a chart that I posted about maybe 2 or 3 weeks ago. And it's very simple, right? We're just looking at these previous breaks. So the first break was the previous highs from November of 2021. We broke out of that. And within about, we barely missed it in July. But when we broke out in May, we missed the 1.618 extension by about $20 or so, give or take 15. And then finally tested that area back in August, and you can see how well this 1.618 extension acted as resistance. So for a while, we were just chopping around there, and this was really resistance. And, one, this became resistance, the 1.618, but then two, essentially price was just respecting these previous highs. So 1.618 extensions are generally used for the first time you test them, and then from there, you just use previous price action as potential resistance. So we finally did get a breakout and close above that area in January, and it only took us about 5 weeks after the breakout to test the 2.618 extension. And so then we got a breakout of the 2.618 extension in mid to late February, and it only took 2 weekly candles to get to the next extension, which is the 3.618 extension, which was at 970.44. I think we moved above it by $3 or $4, but I mean, it was almost perfectly on the money. So it just shows how self-fulfilling these 0.618 extensions are. They are used in the kind of institutional side of trading and just money management. And so they really become self-fulfilling, and really technical traders use these as well. Even if it's retail, it just becomes kind of a self-fulfilling prophecy for everyone. So a big rejection, not what I'd call the best candle here going into the week ahead. Definitely a shooting star type candle. You've got a new high here. Pretty much the entire candle is above the previous candle. So a pretty textbook shooting star here going into the week ahead. We'll just have to see if we get some continuation down. There's definitely some VWAPs and gaps that I highlighted in the Twitter subscription that are pretty important to watch on the downside. So those were highlighted in the weekend update as well. But all in all, I mean, this is the 9th green weekly close in a row. So, generally that would be considered pretty overextended, especially after the move that we've had. I mean, if you look at what the move has been pretty much since the beginning of the year, we're up almost 100. Well, we were almost up 100% on the year. And this is not a small market cap. This isn't just like a penny stock that's up 97% on the year. This is a multi-trillion-dollar company, which is really just fascinating to see play out and kind of see this almost sucking liquidity out of other parts of the market for people to really play this name over the last couple months. So do we kind of pass the baton off to another sector, another part of the market after NVIDIA potentially gets a pullback next week? We'll have to see, but honestly, it would be healthy to see that going into the second half of March. Tesla, shocker, down, new low here. Now, what's interesting is that this trend zone, pretty much starting from April of 2022 and then kind of connecting these general areas, has been quite an interesting area for price to respect. So you can see here that this zone has been an area shown by these orange circles, a bounce spot multiple times over the last, pretty much since the highs that we saw in July of 2023. So 1, 2, 3, 4. This is the 5th time that we've kind of tested that area. If we continue to move down going into the week ahead, the bottom of that trend zone is right around 165, and that kind of lines up with the previous lows that we saw back in April of 2023. So that general area would be an area to watch, and overall, potentially some money flowing back into Tesla. Maybe some of that liquidity was sucked out of Tesla to kind of join the chip rally. But we'll just have to see what happens going into the week ahead. Apple is another name that seems like it's just kind of been a balloon that's just getting the air sucked out of it from this semiconductor rally that we've seen over the last several months, with Apple down from the highs to the low of this week, down 14% within 6 weeks. That's pretty impressive for Apple with no type of bounce. So going into next week, we are trading right at the bottom of this January 23 pivot VWAP zone. If you go on the daily candle, things look a little brighter for Apple's future in the short term at least. But, all in all, not the greatest candle here. Definitely a close below the top of the VWAP zone, which is the actual January 23 pivot VWAP, which is at 172.94. And that gap above on the weekly chart, rarely do you get a gap on the weekly chart between weekly candles, but that gap above fills at 177.38. And if you look at some of the posts that I made looking at the last time that we had 7 daily red candles in a row, generally Apple will rally pretty hard off of that. And so it's just interesting to see that with chips starting to pull back, Apple potentially capitulating, at least in the short term this week. That will definitely set the markets up for kind of a tug of war going into the week ahead if we do get that pullback in the overheated names into some of these names that have traditionally been market leaders like Apple, to potentially kind of keep the market stable at least versus just straight up tanking. But that is to be determined, and we'll see how the week goes ahead. AMD, another chip name that has just really taken off pretty much since the October lows. And this looks like a little bit of a blow off top, at least in the short term. And we barely missed the 1.618 extension at 232.37. Missed it by about $5, give or take, maybe a little less, or right around $5. But all in all, just not what I'd call the most convincing candle for continued upside. But we'll just have to see how the daily candle looks going into the week ahead, and how we open on Monday. But as I mentioned before, if you open up into these wicks of a previous candle, a lot of the time you'll see at least a retest of that high. Obviously, we don't know where we're going to open on Monday, so that's kind of the question mark. But I did go over some of the levels to watch on the daily chart more in the subscription, looking at some of the VWAPs, some of the gaps below that just I don't have time to go over in this video because people only have such a long attention span and so much information they can absorb in a video. Definitely a potential pullback going into the week ahead here. SMCI was actually a name that had a decent candle. I mean, if you look at NVIDIA NVIDIA, AMD, this actually held pretty well. And you'll see here, once again, the 0.618 extension almost to the dollar here. I was going to say cent, but I think we overextended by maybe $3. But either way, same thing. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green weekly closes in a row. We did gap up from the news last weekend about the S&P 500 inclusion. So you do have this weekly gap below that would definitely be an area to watch going into the week ahead. That is at 927. But there are some other technical levels, VWAPs, that are of interest going into the week ahead that I did touch on the shorter term time frames in the subscription. But I mean, if we get a pullback in NVIDIA next week, it would be hard for me to imagine that we don't get a pullback in AMD, SMCI, because at the end of the day, NVIDIA is definitely kind of the leader of the pack in this particular set of stocks in this sector. But just another great case study on the 0.618 extension, really just becoming a self-fulfilling prophecy. So always interesting to see how that works out, and how these levels that really are kind of, I don't want to say imaginary levels. They're not imaginary. They are levels, but it's not like price was previously at 1220 for people to be like, oh, last time it was at 1220, it pulled back. I mean, this is literally just a 0.618 extension, and Fibonacci is just, levels are just really incredible. I didn't really even think Fibonacci was something to be considered when I first kind of started looking at technicals, just because it seems so voodoo to me. But I mean, especially the 0.618 extensions at new all-time highs, they are extremely, extremely powerful to look at. So I do have I have a Fibonacci extension kind of video that I did with Optimus Futures, so I will probably post that video this weekend just because we had a lot of names touch those 0.618 extensions this week, at least on the chip side of things. PLTR is the last one that we'll touch on. Don't need any 0.618 extensions here because we're not at all-time highs, so we can use previous price action to look at where we could potentially go for upside here. Nice move up this week. We did close above the volume shelf here, so I'm pretty much just measuring the volume profile from the all-time highs. And you can see here that we did not actually close above the volume shelf last week, but finally we did get a close above kind of the majority of this shelf this week, which generally suggests further continuation to the upside. Now, the area that you'd want to watch as potential resistance is simply just these previous highs here from June and September of 2021. You can see that we tested the bottom of this zone, but the top of the zone goes all the way up to 29.29, but I'm just going to call it 29.30. So until we get a weekly close above 29.30, I think going into this area would definitely be an area where maybe you consider that this a caution zone, not necessarily anything other than that. If you did want more of a breakout type of trigger, if you're more of a breakout trader, then you would definitely wait for a weekly candle close above this area. But everybody has their own style. Everybody has their own strategy. But in general, we are starting to move up into that area. So going into next week, this general zone ranging from 27.50 to 29.30 would be an area of potential resistance until it proves otherwise. And that would be simply just with a weekly candle close above, I'm just going to say 29.30 because 29.29 is just drives me crazy when it's that precise of a number. But it doesn't matter. You can use 29.29 if you want. I'm just going to call it 29.30 to round it up. That is the weekend video update. I hope it was helpful. I hope it was not only educational, but also just a general overview going into the week ahead for another perspective. These videos are really to give you guys another perspective that you may have not thought of, using technical analysis as a tool to just see where important levels are, using the volume profile, using these VWAPs. They're extremely powerful, and really just using basic horizontal levels. Some people really like to use a lot of different things on the chart, and sometimes if you have too much on the chart, it becomes almost like analysis paralysis, where you've got so many variables. It's like, oh, well, 6 things are telling me bearish and 9 things are telling me bullish. How do you really come up with a thesis with too many variables in play, unless you have some type of ranking system, which is definitely a very systematic approach as well. But either way, as I mentioned, I hope these videos are helpful. And if you are interested in more detailed analysis and just overall ideas going into the week ahead, definitely check out my Twitter subscription. I shared my top 5 setups going into the week ahead. And also, that is just a link that you can click on the video description. It will take you straight to the sign up link. And also, Optimus Futures, partnered with them. They are a futures broker. I'm hoping to get a video out before I head to Japan in late March with them. I'm not sure if we'll get the video done or not, but I will be not doing videos for about 2 weeks. I probably will do a video next week and the week after before I head out to Japan. And then from there, once I get back, we'll restart these weekend videos about every 2 weeks. So that is all I have. Hope you have a great weekend. Thank you for watching. If you enjoy these, please like and subscribe, and we'll see you next time.